Hello, everyone. I'm Andrew Berman, and welcome to another Mortgage Leadership Outlook, brought to you by National Mortgage Professional Magazine and Mortgage News Network. Hope everyone had a great weekend, and hope you're excited for today's show. I know I am. Since things started to fall apart in the mortgage business and the capital markets, and specifically in the non-QM space, I've reached out to someone who I look at as such a leader and a trailblazer, trendsetter in the non-QM space, and that's none other than my buddy Tom Hutchens, who's Executive Vice President for production over at Angel Oak Mortgage Solutions. It's Angel Oak's wholesale division. So excited to bring him in here. Hold on for a second. There we go. Tom, what's going on? Let me unmute you. There you are.
Right. How are we doing, Andrew?
Doing fantastic. So yeah, I was just reminiscing. So like when things started getting ugly, you're the first person I reached out to and said, listen, you are actually I look at you as I refer to you all the time. I hope you don't mind. I call you OG non-QM. There's no question about it. Before people even understood actually what the opportunity was in non-QM, you were going out there talking about this. And by the way, if you're joining us now, please, I'm seeing people are starting to fill up in the room. I want to get as many people in this room as possible. So please, share this, invite your friends, tag people, get everyone actually in this room. Going back, actually, when things started falling apart, I reached out to you and I said, listen, we want to tell the story because you guys are leaders in the place. And listen, at that time, we didn't even know what was going on. We don't even know what's going on tomorrow or today. But before we go actually into tomorrow and today, I want to talk a little bit about your history. Listen, I know you very, very well from multiple companies. I've had the pleasure of actually doing business with you for decades now.
Yep.
So just give us a little synopsis of how you even got involved in the mortgage business.
Oh gosh, we're talking way long ago, huh? Well, I had a good friend that was in the business in the late '90s and told me about it, and very happy that I made the move to get into the mortgage business at that time. It's been very interesting times. You and I have been working a lot together in the last, six years since we kind of started this effort over at Angel Oak. But my background has kind of always been on that wholesale correspondent side of the business, and primarily in the non-agency space. So, that's really my background since the late '90s. So, I've seen the ups and the downs and the crash of the 2008 timeframe, and then fast forward 2013, got together with some people that I worked with in the past and who had already started Angel Oak Capital from an asset management side, and they had a great vision of kind of marrying the two of capital and originations under one family of companies, and that's when Angel Oak came into being and Mortgage Solutions. And so we've been working really hard since 2013 to build this non-QM space up, and then March happened.
Yeah. Well, and so listen, so you're basically, if you look about it, your career has been dedicated to helping the underserved borrower get served by the independent mortgage companies. That's your entire career has been dedicated to that. Now, and by the way, if so people are just starting to get into the room right now. I'm just curious. So if you've ever done a non-QM loan, just please hit hashtag non-QM. I just want to know if there's anyone actually here that's joining us. We've got the room starting to fill up here. I'm seeing, we got people coming in on Facebook and some people joining us on Twitter and YouTube. So please hit hashtag non-QM if you've ever done a non-QM loan. So we're just curious. You
want me to do that, Andrew, or you want to?
Have you ever done one? All right. So Talk to us a little bit about actually, the kind of like, I guess the rise of non-QM. Like what presented the opportunity? Like why did it all of a sudden go from where it was to like which I mean, when did you guys start Angel Oak Mortgage Solutions?
So we started Mortgage Solutions in 2013, and at that point, that's really when you and I started again working together a lot. It was that we were just on an awareness and education campaign. It was just making people aware that the only products out there aren't just agency and government loans, that there are some other things out there. And we knew from our past experience, there's just always a need for non-agency loans. The agencies were not built to give everyone in America, every deserving person in America, a loan. That's not really their mission. So we've always been in that non-agency space. It became termed non-QM, which was, we had to educate people on even that, because when that designation QM, non-QM came about, and I think it was January 2014 when that really became official, a lot of originators thought, well, you're not allowed to do a non-QM loan. Like,
yeah,
it's against the law. So we just education. We had to spend a lot of time, and it's been fun. We've educated a lot. We've seen the acceptance. One of the big things, and the reason the industry was having the success was when we were telling the story in 2013, 14, 15, in that range. It was a lot about, hey, trust us, these loans are going to be good loans. But after 2015, after we had a couple of years under our belt of originations, we didn't have to say trust us. It was look at the data, look at the performance of these loans. We've got deserving borrowers that just don't fit agency and government guidelines. And once that happened, once people got to see the performance, that's when it kind of really started to skyrocket. And hockey stick is a phrase that we use a lot.
I love that, because it describes, and we were now, do we actually get up? Because like I felt like we kept like down here, because I kept like we were like, if you looked at that hockey stick, by the way, hockey stick over here, like we were kind of down here. I don't know if we ever really got anywhere up here, because like it seemed like there was just nothing but opportunity. People were just starting to understand what non-QM was and how to use non-QM.
Right. Yeah, I'd say we started the hockey stick for sure, Andrew. We just, maybe we were at 10% of the market potential, 5 to 10%, but we definitely, we were seeing year over year doubling of our volume. Things were going great, but very optimistic where we are today and where non-QM is headed from here.
Yeah. So let's talk about today.
Yeah.
And by the way, if anyone actually is just joining us now, please comment if you've ever done a non-QM loan. So if you've done a non-QM loan at any point, do hashtag non-QM. We just want to see actually how many people that are joining us have actually done non-QM loans. So we've got more people joining us on Facebook and Twitter. So we'd just love for you to share. We got Mr. Joel Berman.
All right, Joel.
He's been a loyal Angel Oak fan, a loyal Tom Hutchens fan for decades. So Tom, Angel Oak ride into the non-QM space alone created a niche that others followed. Looking forward to Angel Oak breaking loose and reinventing the non-QM space again in only way that Angel Oak can.
Yeah. Well, that's the one thing that during all this craziness that we've, the whole country has experienced for the last couple months, it has not, our commitment to the space has not wavered one bit. So that's what has survived this pandemic, is that Angel Oak's commitment to non-QM is still there, because this really wasn't a credit-driven collapse. And I think it is important, before we talk about today and like where we're going, is for people to understand what happened. And the difference between non-QM and QM loans is that QM loans, the actual performance of those, they're guaranteed by the government. So you've got agencies and government loans, the performance is guaranteed. Non-QM loans, there is, that's private capital. So there is no government guarantee of the performance. So as soon as states began shutting down their economies, right? I know we have some still that are out there doing that, but when it was just becoming nationwide that states were going to limit business activity, and obviously to a greater degree than we even knew initially, it became impossible for us and any non-QM lender to determine and evaluate credit risk, because that's really what we do for a living. We evaluate credit risk and give credit to deserving borrowers. But when you can't determine the credit, you can't originate loans. So, the speed at which it happened really kind of at the speed of the pandemic and the virus, the growth of the virus. It went from, we were talking about it, and it seemed like the whole country was talking about how they would run their businesses in this new environment of some work from home opportunities, and to shutting down, and that happened in such a quick period. It really caused the entire secondary market that supports non-QM, that private capital, the investors, to say, hey, we're out, because we don't know because we as an originator, we're not able to justify credit risk and make credit decisions. So that's why everyone kind of all at once had to put a pause on lending, because there's no way to evaluate credit risk and you have no government guarantee. That's not a good combination.
So, and when would you say actually that you saw the non-QM lenders really just that where they all said, okay, no more?
Well, I mean, when I say it happened fast, Andrew,
yeah,
I don't have the date in my head other than it was mid-March, but on Tuesday night, we were making a large purchase of loans. And by the time we woke up Wednesday morning, literally by the time we woke up, by 7 o'clock Wednesday morning, non-QM was just, it had frozen overnight. So it was, again, we kind of knew things were going to be challenging, but we didn't know to the degree. And that's because that was the week that states began shutting down, saying no more business. We're everybody must stay at home until we tell you not to leave the house. And that became quite the issue in the entire economy, not just the mortgage space.
Yeah. Listen, and I always go back actually looking at. I love some of the data that you guys would share on the webinars we did. And now, listen, we don't know what it's going to look like, post COVID. But I mean, I was always impressed by the way lenders, all lenders were managing their risk. I know there was a number you guys gave. The total number of defaults I think it was up until 2018. I think it was all the non-QM loans. Wasn't it something like it was like I
on your fingers.
eight. I forget how many loans, but I thought it was like 8%. But no, it was only 8 loans, which I think actually, and the number was would be like almost like 0.001%. So these were great loans. These were really great loans to people. From what I remember, like the scores were like in the mid 7s. These were
great. And it was part of the whole. It still continues to be the part of the story is that there are deserving borrowers, and that was part of our education for the first few years. Is that the non-QM wasn't just hey, let's start doing those five low 500 credit score borrowers. No, these are high credit borrowers, but they have something in their past or in their current that just won't allow them to qualify for those agency and government loans.
So we know where we came from. And by the way, I don't know if you realize this, but we have the non-QM queen is with us, Myrnie Rodriguez. I don't know if it's somebody that you know, but we also have the non-QM prince, Larry Mize.
Wow, we got it all covered.
Yeah, very cool. Lots of well-known non-QM gurus here. And listen, if anyone has any questions, feel free to ask them. I don't think we're going to get into any kind of specific program guidelines today. It's just there's too much. But talk a little bit about what non-QM looks like today. What are the lenders that are starting to come back and offer non-QM? What are the products looking like today?
Well, it's hard for me to speak about the industry because it's pretty fragmented at this point. The secondary market is still kind of a little bit on pause, although Angel Oak Capital did issue a securitization Friday, and even in this market, and this was pre-COVID originations. So there's still a market there, and we have all plans to get that engine back going. Before the pandemic, we were issuing securitizations every other month, and we expect to be back there, in the near future. So, the originations, it kind of goes back to what we talked about. It's as long as we can evaluate credit risk, that's the key. If we can evaluate credit risk, then non-QM originations will be back and be alive and well. And so we have a bank statement product now. People thought, well, gosh, how do you go into bank statement products? But just think about it. If we're looking at current bank statements where our economy has been dislocated for the last 45, 60 days, so we can evaluate credit risk. We can look at borrowers' income during that period. Yeah. And if their income has been reasonable, maybe it's not exactly what it was the months leading up, but if it's in the range and the borrower has good credit, and we can evaluate that credit and make a good credit decision. So we have a bank statement loan, and it's a good bank statement loan. It's a lot better than the bank statement loan we had when we started this back in 2013, 2014 range. So,
and we celebrated that. That was a great thing. That felt great.
And we also, a really popular product, bank statement was our biggest and the industry's biggest product. That's self-employed borrower. Everybody knows that they really got cut out of the market post 2008, 2009. So that's for the self-employed borrower. But our professional investor loan, we call it our investor cash flow. That's been a hugely successful product as well, and we have that back out now today. And that's where we're not looking at the cash flow of the investor or their business, their bank statements. We're looking at the cash flow of the actual rental property. What type of rent does a property generate, and the borrower qualifies based on that. So those are kind of the two biggest products pre-crisis, and now they're, we've got them back. So excited to have that. We also have a jumbo full doc program because we know the prime jumbo market has gotten a little upside down during this period too. So, I think between the prime jumbo full doc, the bank statement, and our investor loan, we kind of have a lot of the bases of non-QM covered, and we're originating those today.
So, and how long did it take the team to say, all right, we're going to come up with some new products? Like how did that process happen? Obviously, we know the non-QM space pooped the bed, and then and here we are in May. Like, how long did it take for your team to say, all right, what do we do? How do we actually offer some kind of product so we can help these underserved borrowers?
Well, I think there's a lot of factors that go into it. I mean, obviously, private capital is a big player in the space. So private capital had to have a willingness to want to participate in the space. But then also, as we started to see economies and states open up their economies, and when you start looking at the numbers and the cases, and it seems very apparent to most people that we're past the worst of this, and now we're just kind of working our way back open. And it varies by state. I, happen to be in the great state of Georgia, and Georgia was one of the first ones to open up, and it's been great. People are using their head. It's opening it back responsibly, which is what a lot of people expected, and that's what's happening here. And we kind of expect that to continue to happen across the country.
And can you comment on as far as like how you guys are going to view the forbearance if someone's applied for a forbearance?
Yeah, well, sure. I mean, we're like anybody. We want to help. Our mission is to help those underserved borrowers.
Yeah.
So we're going to help those borrowers that have been affected. So we take a forbearance just like anybody else. If someone has had a hardship and they haven't been able to and they're not able to pay their mortgage, then we're going to work with them and put them on an appropriate forbearance plan.
Which and to me actually it's but if someone's like if a new borrower comes to you, and they say, hey, listen, things are going better, but they applied for a forbearance, how does Angel Oak view that borrower that has a history of a forbearance?
Well, you mean when we like in 2 months, someone that had
2 months they came back and they said, yeah, listen,
I think that's a great question. I think time is going to have people are going to have to work through this.
Yeah.
If somebody requested a forbearance in April, it's going to be hard for us to give them a loan in May. What would have changed in their financial situation? And perhaps it has. And if it has, then that's what we're here for, right? Those are the kind of things that we do. So again, credit risk, if it makes sense, and that scenario that you just gave me. But I think what's really going to happen is those aren't the people that are going to be looking for loans. It's maybe later in the year, the people that had some challenges during this period, as the economy opens back up, they've gotten themselves back, their feet back under them, and they're ready to buy that next house.
To me, it goes back to one of the first things that you told me, that these are story loans.
Yep.
And that was it stuck in my head, and I still think of it now, like hockey sticks and story loans. Like those things.
Those are your two favorite, huh?
Yeah. There's no
question. Stuck with you.
Yep, and that's so. Listen, it's like I think the answer is it depends. It's every situation gets looked at. Non-QM loans are basically they don't fit all into the same box. I want to point out something. Marnie Rodriguez was asking when the DSCR investment property loans will come back, and we have, of course, Steve Winokur coming in actually for the save on that and sharing. It's back, Marnie. That's our investment.
That's what we just talked about. Yeah. The investor cash flow. That's the debt service coverage ratio, the debt service that the payment on that property can cover.
All right. I don't know where Berman's going on this, but is there any truth when things opened in Georgia that you had a tattoo of Angel Oak put on your chest?
A tattoo?
Yeah, a tattoo.
I'll get back to Joel on that one. We'll talk offline.
Okay. So listen, let's go back to the securitization. So on Friday, you had I know previous securitizations oversubscribed, 500-600 million. How big was this? And I can't imagine it was oversubscribed like the previous ones.
Well, amazingly, I can't remember the exact dollar amount, Andrew, so I don't want to put that out there. But but it was actually oversubscribed. So again, I think it kind of speaks to our history and our track record of what we've done over the years. And there's been more clarity into those loans because this security is a couple months after the shutdown of the economy, so it's gotten a little track record of performance even of those loans. So I just think it kind of speaks to the commitment of Angel Oak to the space, that we're here to stay, we're originating new loans, and we're gonna stay in this space and keep taking care of these underserved borrowers.
Yeah, I mean, listen, I think however many dollars it is, it's just the fact actually that the market is looking for it and they have an appetite for it. That's the important thing. Yeah, I shared with you. I had a dream about that. I had a dream actually that I woke up and I told my wife about this, and she's like, "What are you talking about?" It's like there was a non-QM securitization. I was so excited, and she wanted to have me seek help from that.
That makes sense.
So listen, I want to talk. Personally, how is this impacting you? You're in Georgia, which you guys are open now. You guys are opened up one of the first major areas to open. So that's got to feel good.
Yeah, I think the thing that I've seen the most is I actually have 3 kids all in high school, and my oldest actually graduated. His graduation ceremony and everything was supposed to be 2 days ago on Saturday. So that to me has been one of the most difficult's not the right word, but just unique is that what our children are seeing, and not being able to go to school or doing online schooling and Zoom meeting and stuff like that. That's been very interesting. I'd say it's been disappointed for me as a parent and father to see my senior in high school not be able to be a senior in spring in school, because gosh, those are great times and great memories are built. They certainly have memories, but they're different memories than the kind that you and I remember. So that's probably been the biggest change. I'm in Atlanta also, and traffic hasn't been what it used to be. But I long for the day that we have that traffic. I'll never complain about it again.
So and like how's your son's like that's got to be a big thing to being in senior year and having a lockdown. Like how's he mentally dealing with that?
I think every kid is resilient. That's kind of what we are as humans, and kids especially. Then you also factor in those that have made plans to go to college in the fall. There's still question about what's going to happen in the fall. So hopefully, again, the economy is going to continue to get back. The pandemic itself, the numbers are going to keep going down, and then we can kind of get back to, I don't even want to call it a new normal. Let's just get back to normal, whatever that normal looks like. But I think people are really looking for, hey, let's just say school is in the fall. All right, it's summer. Let's just be back in the fall, and everybody will be happy with that.
Great. So, hey, can you talk to us a little about some of the non-QM opportunities that are out there now? So we now have some non-QM products that we can go out there, to our borrowers. Maybe you can share with us, some of the deals that you're seeing coming in, whether it's like the type of borrowers, or give it some insight, because I'm sure right now we have actually a handful of originators that are out there, brokers that are watching this, that are saying this is great. I've been waiting for this, but then they're like, wait, something. I don't know if I'm going to actually contact that restaurant owner that I've been talking to for the last 3 years about actually doing something. So right. Maybe you could share with us a little bit, some insights on the kind of deals that you're seeing being served.
Well, I think it's always important for originators, from an originator perspective, is now there's lots of refinances going on, but you always have to maintain that purchase business. You always, in fact, I see a lot of other webinars and podcasts and things, and they always talk about, make sure those realtor relationships, you don't forget about those. So realtors, it seems like real estate activity is actually doing quite well during this period. So you want to make sure as an originator that you're out there with products that are needed in the market. And the growth of non-QM that we have always seen has really proven that there is a need in the market. There are borrowers out there that are just never going to fit Fannie, Freddie, and FHA guidelines. They're just not going to. So I think knowing that bank statement products are out there, we've seen a lot of originators be what they call self-employed experts. So they kind of get known in their market that, hey, if I'm a realtor, if I've got a self-employed borrower, I'm going to have them call this person, because I know they can do these kind of loans. I think to get back out there and put some clarity, because I think there's a lot of confusion in the whole market, not, in real estate, in finance, in the mortgage space. There's just a lot of confusion of what is and isn't out there. But, now would be a great time to take the products, the bank statement, the jumbo full doc, and this professional investor loan, and get those out there to your referral sources. You think about it. Investors are probably out there buying investment properties right now. They need a product.
Yeah. No, it's a huge opportunity right now. There's investors that are drooling on themselves, thinking about the opportunities that are presenting themselves out there. And I think the other important thing is there's so many people that have said this is the death of non-QM. Like I have two friends of mine actually, who refuse to do non-QM, and they're definitely actually they have the attitude like, I told you so, Andrew. And something,
Yeah.
I could understand actually, the perspective of where they come from. However, I think actually, when you look at the numbers, when you look at the fact actually that these are people that actually bring in some good income, they're just not they're fitting the traditional mold, and there's plenty of opportunities out there right now.
Yeah, I mean, I don't see this as the death of non-QM first and
No.
foremost, and also the demand for non-QM hasn't gone away, and it never will. There's never going to be a period that the agencies and government loans are going to take care of every borrower in the country. That's not their charter. That's not what they were created to do. So there is always going to be non-agency space. Call it non-QM, call it non-agency. That's really always going to be there, and it's still there. And that's what I was saying earlier. That's our commitment. That's what we remain committed to, because we know it's always going to be there. We knew in 2010 it was still there. 2000, we knew it was there.
Yeah.
It was just the market from that crisis took a lot of time to heal, but that was because it was a credit issue that caused the downturn.
Yeah.
This wasn't a credit issue. This was a virus that caused the downturn. And credit was difficult to evaluate, but it wasn't a credit-driven crisis.
Yeah.
The loans that have been originated have performed. The loans that we continue to originate, they're going to perform as well. And that's really the key for non-QM to be here and to succeed and to grow.
Yeah, I do feel bad actually about one thing that you guys have to deal with as private label security issuers. You don't have actually the government facility actually that's writing you guys a check saying, "Hey, don't worry, we'll take care of you actually for those payments, because you're still doing it. You're still doing a forbearance because my neighbor got a forbearance and the other neighbor got a forbearance, and the borrowers are still calling up, hey, where's my forbearance?" And you guys I'm you're giving forbearances, but without actually that government backstop. And I do feel I always try. As soon as I saw that happening, I felt bad. But something, I think the other point is that do you like the forbearances of private label securities for like non-QM compared to let's say FHA loans? I believe FHAs, there's more loans going into forbearances than on the non-QM loans.
Yeah, right. And that's so I think really the good news. We can kind of backtrack and look at. There was some confusion when the whole forbearance issue was thrown out there, because it was people thinking, hey, it's free money. I just don't have to pay my mortgage for a few months and all is good. But really what we're seeing is even those that make the phone call and inquire about a forbearance, they continue to make their payments. The one thing that has always given us comfort being in this space is that people have to live under a roof. So there's always a priority to your home. People are going to make those payments on their house. So, it kind of speaks to the quality of our originations. Even as our non-QM continued to grow and flourish, our loan to value was always under 80%. So people were making 20, 25, 30% down payments on their houses. Well, you're not just going to walk away from that because you had a bad month or something. So again, it's broader than just non-QM, because it's the entire economy and the unemployment and all that. But we feel really good about the space itself and the ability to survive during this period. You're right, we don't have the government backstop, but that we've known that. That's been our space to play in all along.
Yeah, but so the borrowers have got money into the property. They've shown the willingness to pay by having great credit scores.
Yep.
Listen, business owners figure out ways to do things. They don't give up. So
Yep.
I think actually that's and listen, non-QM. I mean, well, non-QM is not just about the business owners. There's no question about it. The business owners were one of the groups that benefited the most, actually, I think, from the non-QM space.
Without a doubt. Yeah, but I think even broader than that, we're just Americans like to fight, and we're all going to fight back and get things back on track as fast as we can, and certainly someone paying their mortgage is always a priority.
Yep. Very cool, man. Very cool. So you want to talk to us a little bit about the future? I know it's so difficult to predict tomorrow, but what would have to happen actually, for us to see, more non-QM products come into play? What would have to happen to see more, I guess, securitizations coming into play?
Well, so I think first of all, non-QM is going to be back fully. I just can't tell you when. Like you said, I can't. I don't want to get into predicting what's going to happen tomorrow or next month, but I do know it's going to come back, and probably come back really strongly, just like the rest of the economy. So I have a lot of confidence in that. I just don't know exactly when, but the securitization engine that had been created around non-QM was working fabulously. I mean, it was, like I said, we were issuing them every other month. The market was growing. The estimates for 2020 were going to exceed 50 billion in securitizations from 2019's 25 billion or so. So it was going to double the kind of the midterm 3 to 4 years out. Everyone was looking at 200 billion ish in that range. So that hasn't changed. It's just we just hit a little bump in the road. The entire economy did. So the commitment's still there. It's going to happen. I don't know exactly when, but we're going to keep putting products out there, improving the products. One thing that we always do is we evaluate our credit decisions and the performance of the loans. And as the loans continue to perform, the products get better. And then securitizations follow. Then pricing gets, it's like, so it kind of gets that entire engine going again, where everything is better for everybody in the mix.
It's right.
Including, and most especially, the borrowers.
Yeah, most important. Yeah, I mean, that's right. Over the years, your pricing came down. You were able to do a little more. So yeah, that's great. So now, do we actually, is there a point where we go where we're able to skip and go back to 2019? Because right now, I think I've heard actually right now the non-QM products resemble 2015. So if okay.
No, and that's a pretty fair analysis. It's not 2013 or 14 when we first started, because that was real basic. But the difference, I think the reason that this is going to come back a little bit faster or a lot faster, is that the market had shown the success. It had shown how well it could work, how good the loans were. And again, back to, this isn't a credit issue that we're faced with right now. It's a virus. So. I think everyone really understands that. So I think this thing will get ramped up a lot quicker than it was. So I don't see this being a 4 years to get us back to the 2019 levels. I think it's going to come back really fast. I just don't know exactly when that's going to happen, Andrew.
Listen, it's vaccination comes, we're like this. It's all of a sudden it's 2019 again, and we're going actually crazy, doing everything we were doing before, helping as many borrowers as we possibly can. So that's, listen, I'm really, really excited. I was excited about actually the non-QM product back in 2013, 14, whenever we first started talking about this. I was excited about it back then, because one of the things that, and listen, I'm a broker guy. I love the independent mortgage company, whether it's the broker, small mortgage companies. To me, actually, that's actually my roots. My dad was a mortgage broker. I just identify that is actually the American dream of owning a business and fighting it out there, like you were saying before. And really, actually, The big banks are not able to embrace that opportunity the way actually, the mortgage broker and the independent mortgage companies were able to. And that's a huge differentiator. And I feel is what's partially led to the growth of the mortgage broker by being able to offer products like that.
Without a doubt, it's a competitive advantage to be kind of that mortgage broker that can work with an Angel Oak and bring out unique products. That is what makes a mortgage broker special. So, and I think that's really kind of a good point. That I didn't touch on is that the correspondent space in non-QM had also grown pretty rapidly, but that pause will probably remain a little bit longer, only because wholesale always seems to be the first to build things back up, and then it expands into correspondent, and that's what we saw in this first building of the non-QM space, and I expect that again.
Yeah, well, I mean, because then we're also dependent on the warehouse lenders, who they're going to be shy. They're not going to necessarily be bring it. So it's an extra layer of people that have to feel comfortable, other than the originating entity. And
I think everyone will come back. I do think warehouse lenders are going to look at the originations again, just like they did a few years back, and say, "Yep, these are good loans, good quality, good performance. We're in." So. I think it's almost going to take the same cycle, but it's just going to be a lot faster cycle to get back to where we were.
Yep. It's going to ramp up quickly. So, and just can you share a little bit about why the mortgage broker? So your entire career, decades, has been focused on the mortgage broker. What do you love personally about the mortgage broker, Tom?
I think we're just in the relationship business. It's really not about the products. It's really about the relationships that we form with the brokers. When we can show them a way to make more money and for them to go out and expand their reach to new realtors and new borrowers, that's what's really fun about this business. And then at the end of the day, we know that we've helped people buy homes that otherwise they wouldn't have been able to buy. So you put those two things together, man, this is an awesome business.
That's great.
It really is. So that's what keeps us motivated is those relationships that we've built over the years, and we want to maintain those relationships and help other people make money and help borrowers become homeowners.
So now, is it scary being like the market leader, like being actually like the Xerox and the Kleenex of the non-QM business? Because basically everyone's watching everything that you guys are doing, and your steps are magnified. Like if there's another small mortgage company that's doing non-QM, and there's something they do something and they take 2 steps forward, 2 steps back. It's not. I mean, it's less of an impact than someone like Angel Oak. Leaders in the space.
Yeah, Andrew, I wouldn't call it scary. I think it kind of gives us a little sense of more responsibility. Perfect example is we were being asked right after this thing, after the pause was happening, to speak and and do all this, and I just
Tom, come on, man, get on here with me.
Well, I mean, what could I tell you a month and a half ago, Andrew? There was nothing to tell you.
I know.
So that's really kind of why we waited until we actually had some clarity that we can share with the market. We didn't have clarity 4 weeks ago, 6 weeks ago. So there really wasn't a lot to say. There's plenty to say now. So that's why I'm on here with you now, is to just let people know that non-QM, it's not what it was. We're bringing it back responsibly so we can still evaluate credit and make good loans. And by doing that, this is going to accelerate the return of non-QM as we all knew it in February 2020. Fantastic.
Tom, you exemplify of what we represent when we put together this mortgage leadership outlook. It's people like you, companies like Angel Oak, that are leading the space, and we really, really appreciate it. So everyone, please, if you're in the room, give a hand clap actually in the comments for Tom and Angel Oak. So please just join me in a hand clap. Don't make me be the only one here that's hand clapping. So I really, really appreciate you coming on and joining us for this. We're so excited actually to know that we've got some non-QM product that we can do. We got a bank statement product. We got an investor cash flow product. We're so excited about that. We know actually it's just going to be more and more, and we know that you guys are going to lead us through this, and as you guys do this, other lenders are looking and saying, all right, they're doing it. Let's do it. You got a securitization going out there. So I love seeing it. So Tom, thank you so much for joining us today.
Hey, Andrew, always a pleasure, my man. Call anytime, and good catching up with you.
All right, stick around for 1 second. I'm just going to take our viewers out here. All right. That was awesome. I waited for that for so long because, listen, these guys are just amazing. I love what Angel Oak has done, and basically just kind of being the leader in the non-QM space. I talk about it all the time. They're the Kleenex, they're the Xerox of the non-QM space. So listen, coming up, talking about leaders, we have just this week is just like I'm humbled by the guests that we have. Obviously, Tom, amazing today. Tomorrow we have Jeffrey Tesh over at NCN. Talk about actually underserved markets. Jeffrey's going to come on and talk a little bit about their investor product, their fix and flip product. They've got products out there. They're doing stuff. There are RCNs out there. So we're going to be on there. And then Mr. Eddie Perez from Equity Prime is coming up on Wednesday. So excited for that. And Martin Warren from Nations Direct going to wrap up the week on Thursday. I told him he's got to wear one of his famous bow ties. I think he has something like, I don't know, like 1,000 bow ties, some ridiculous amount of bow ties. He'll be on Thursday. So everyone, thank you so much for joining us. We really, really appreciate it. We're having a lot of fun doing these. We're going to actually have a special week lined up, not next week, but the following week, where we're going to have some groups of leaders join us. So please make sure, you check out past episodes. You can either use the hashtag or go to nmplink.com/MLO Outlook, and you can watch past episodes. Everyone, thank you so much for joining us. We really, really appreciate it, and have a great day and stay safe.